Alright, what's going on, guys? Back for another quick YouTube video today. Today's probably going to be a quick, short one. It's going to be all about when to sit out of the market, when to not take a trade, and just give you some clear visuals and ideas as to when just to watch the market and take the day off. And I say it's going to be pretty quick because we have two great examples of days where you shouldn't trade from last week. One being Friday when we had a bunch of FOMC members. One potentially being the day before FOMC. So I'm going to first pull up this. So go over to calendar, USD. It's the 10th, so here we go. So Monday was a good day, one red folder. For me personally, I like to wait till 10 o'clock, have that news come out, and then trade. Tuesday, we didn't really have any news, so that was fine. Wednesday, oh, but here's the thing. So Wednesday was FOMC, right? So Tuesday was pretty choppy, and we'll go over that. So usually the day before FOMC is pretty choppy, which means your probability is down. Even if you see a decent setup, the chances of it working out is much lower. So I like to sit out that day. I don't want to, well, I don't necessarily sit out, but I don't like to force anything. And I go into the market expecting worser conditions than normal. Wednesday we have FOMC, so it's pretty volatile. I'd be very careful trading that day. Thursday had a little bit of news, but it was okay news, right? So this Trump speaking was pretty sketchy because he didn't even end up speaking till like 11. So the whole morning was kind of choppy waiting for that to happen, and then you may have found a decent setup and we skyrocketed. And then Friday, I mean, yeah, none of the folders are red, right? But there's literally an FOMC member speaking from 5 in the morning till 8 at night. So it was, you guys will see, it was pretty terrible that day. So now looking at market conditions, right? You can see all of this is chopping all morning, right? Friday, straight chop. 8:15 we were just chopping. We weren't getting any new highs, right? We were failing to swing all highs, and that's why there was a bunch of people, including myself, who were taking either losses or a bunch of break-even trades because draw on liquidity was data highs and we kept failing to swing it, right? And then we got a random drop down that was 560 ticks with no entry really. I mean, some people might have found an entry, but I personally didn't. And then what happened after that? We continue to chop like this. So you can see clearly this is not something you want to be trading in. You're going to get chopped up. You're going to lose. This is all of Thursday. Thursday was Trump speaking. So you can see. Oh, it's Thursday PM, my fault. So that's obviously choppy because less volume. This is Thursday morning, I believe. Yeah, I remember this. So Thursday morning, you can see right here, Trump was supposed to be speaking, so that news messed with us, and we were just chopping, and then finally, boom, took off. So there was possible entry down here for a few reasons. We were in a new week opening gap. We had clear imbalances over here. That's something you need to look for, especially for trading the strategy I use, which is the PO3. If you don't see clear 15-minute PDRAs, which I can mark out, if you don't see clear 15-minute PDRAs like this, they need to be clear and preferably unmitigated, right? So like if it's mitigated, the probability goes down, but like you can see, even though we have this 15-minute, it's been mitigated. This one hadn't. And what happened? We went down, tapped it, and flew up. If you can't find clear, unmitigated PDRAs, your probability is down. Can you still trade? Yes, but you have a better chance of waiting and finding a good setup through that. So that's one easy way. This was PM session, also pretty choppy. There was a good PO3 on the for 2 p.m. We ended up failing to swing high twice, and then once again we had a dump of like 660 ticks. So that's pretty clear market conditions. Anytime you see something like this on any time frame, until you get a valid breakout, a valid sweep of liquidity, you do not want to trade this. And that's one of the biggest psychological problems with people is you get a dopamine rush from trading every day. So you look for a trade. You want to force a trade every single day. Even if that means you might lose, you want to get that rush from clicking the buy and sell button, which is to our detriment every single time. The best of the best when it comes to traders do not trade every single day. They're not taking multiple trades every single day. They're sitting and waiting for that A++ setup in perfect market conditions where they know they have the best chance at winning. And when they do, that's when they size in, they leverage more, and then their risk to reward is obviously greater. And that's okay. And it's good to risk more because they wait for that perfect moment. They're patient, and that's the biggest key in this game is to be patient. So yeah, you just gotta make sure to you need to find your draw on liquidity. You need to flip through the time frames because to anybody, does this look good? I know this is like Asia, London session, right? But look, we're no better over here in the New York session. There's no reason to trade in any of this because I promise you, next Monday, next Tuesday, all of next week, you're going to find trades that are better than this. There's no reason to be trading in this when trading is not going anywhere. You're going to have days next week, you're going to have days next month where you're going to be able to trade and you're going to get nicer, cleaner moves. Like potentially something down here, something anywhere where you're getting real volatile moves, right? You don't need to trade this. There's no reason for this video to be long. I was just trying to give you clean examples. But basically, when you go into the morning, this is the checklist you need to see. You need to look if we're ranging, right? You need to see if we're failing to swing. You need to look for good draw on liquidity. Clear PDAs. This is what you need to see. Okay? If we're ranging, wait till a breakout. If we're failing to swing, just know that even if you see a perfect setup, there's a chance that you don't hit TP, and that was clear here. Up here, there was good trades that I took up here, and it went break even because we kept failing to swing this high. Even though that was a perfect draw on liquidity, and I promise you, no matter how many people you ask, the majority of traders Friday were looking to take out this high prior to moving lower because it was a perfect draw on liquidity inside PD arrays. We failed to swing it. So right after seeing that, if you took a break-even trade up here when it was perfect, you should have been like, okay, this is not working. Price action's not doing its thing right now. Let me just step away for the day. Let me switch to a paper trading account and practice for the day, right? There's no reason to use an eval, a funded, a live account, whatever. Don't use it. Failing to swing right here. Find your draw on liquidity. I post it in my Discord every single day what my draw on liquidity was. Type them out or draw them out. I'm not sure what's happening. I'm not sure what that was. Draw out your draw on liquidities. You want to have an idea of where the market's going so you don't guess. If you don't have clear draw on liquidities, if it's not low resistance liquidity, this is all low resistance, you see that we just failed to swing the highs, which is just generating us nice liquidity to come down and grab. All these stacked lows are great. If it's high resistant liquidity all day, just sit on your hands. Don't trade. There's no reason to because I promise you, you're going to put yourself in a hole. You're going to tilt. You're going to gamble. And then the following day, you're going to have an A+ setup. You're going to make money. And you're still going to be in drawdown because you screwed yourself the day prior. So look for this stuff every morning when you go into the market. Don't wake up 5 minutes before the market. Don't hop in a trade at 9:30 if you literally just woke up or if you just opened your computer. Make sure to get a chance to open it up, go over everything, flip through the time frames, really find what your bias is, really find where you think the market's going. And you can even see in the 4 hour, we've been super choppy. You can see the difference between moves like this, That's pretty choppy. It moves like this, moves like this. You can see the difference between that and what we've been going through for the last few days. There's a huge difference, right? So this is a quicker video. I just wanted to get something out for the weekend, but it's still a very important video. If you are able to sit on your hands and not take a trade, I promise you that is the biggest step forward that you can take in your trading journey. Because I promise you there's going to be so many people every day who overtrade, who gamble, and they're only setting themselves back further and further, whereas you're taking that step forward and you're like, you know what, I know tomorrow my setup is going to come with better market conditions. It's going to be a clearer setup, and it's going to bang TP easy, no stress. Whereas if I take this mid setup today just because I really want to hit that dopamine and I really want to see my numbers and my P&L fluctuate, I'm just going to set myself back, right? So don't do that. With that being said, I'm going to head out. I will catch you guys possibly tomorrow, but if not, definitely Monday for a trade recap. Peace.